the Forex coin flip experiment. So today, what we're going to test is if we can be profitable purely by just flipping a coin. It's a bit of a test of risk management versus trading with no strategy. Can you be profitable trading without a strategy? I actually think that you can, and we're going to dive into it in this video, and we're just going to see where we get an account in a backtesting mode. I'm Sam. I'm not a millionaire. I've been profitable for around 10 months now, making around sort of 1 to 4% a month. Some months a bit more, some months negative, and we lose. I share everything I do for free in Telegram, so you can take a look, see, you can decide if I'm profitable or not, but you can have a look at all the trade ideas that I come up with. I share everything, anything going on in the Forex world, all for free. So my Telegram, the link is in the description. Right, so really what we're testing today is risk structure versus strategy. The strategy is that every 5 candles, we will just enter a position until that position finishes. And heads, we will buy, tails, we will sell. The risk structure is that after a losing trade, we will increase the risk of the next trade by 0.5 units of risk. So let's say your baseline risk is $10 a trade, then trade 2 will be 15, trade 3 will be 20, trade 4 will be 25, etc., etc., until you get a winner, in which case then you reset back to your 1 unit of risk, which is $10 a trade. We will use a 1-to-1 risk to reward, so there's nothing outweighing like greater wins or greater losses, and we will just let it hit stop loss or take profit every single time. We'll backtest with a 1K balance, and we'll see where we get after around 10 trades and where the account's at. So let's begin. All right, here we are. So since the idea for trading and exiting and entering is completely random, we're just going to choose GU because it's quite a consistent Forex pair. So we're going to go to a fresh GU chart, and we're just going to scroll back around a year or so. Okay, so here we are in Jan of 2023, about a year ago. We've got our 1K starting balance. We're going to start off by risking 10% per trade, and if we lose, we then increase the next trade by 5% and 5%. So first trade will be 100. If we lose, the next trade will be 150. If we lose, the next trade will be 200, etc., etc. And then when we win, we reset back to £100 risk for our trade. So now to decide if we buy or sell. So heads we buy, tails we sell, and it's tails. So tails we sell here with a 1-to-1 risk reward, risking 100. Let's see what happens. Okay, winner. So plus 100 here. So the account's at 1100. Right, straight away we're going to the next trade. Heads we buy, tails we sell. Heads. Okay, time to buy. Okay, and that was a winner. So plus another 100, 1200. Heads we buy, tails we sell. Tails, time to sell. Okay, that was a loser. Cool. So minus 100 now. So the next trade is going to be 150 risk. Heads we buy, tails we sell. Heads, so we buy. Okay, and another winner. So that's plus 150. So the account's at 1250. Okay, so next trade straight away. We're going to do this for around 10 trades or so, see where the account gets us. Heads we buy, tails we sell. So let's risk it again. We are on heads, so time to buy. Okay, there's a loser. So minus 100. Okay, now what I want you to notice already is that we've had 1, 2, 3, 4, 5 trades. We've had 1 winner, 2 winner, 3 winner, 2 losses. So we'll do a few more trades to actually decide on the win rate. 5 trades is definitely not enough. But notice how already it's sort of just close to 50-50. Okay, even just flipping a coin, which is why it's so important about risk structure. Why I think risk structure is so important, and we'll dive into that more towards the end of the video. But we're going to take the next trade. So heads we buy, tails we sell. Heads we buy. That was a very quick loser. So this one, because we're on another losing streak, this one we would have risked 150, so we minus 150. Now this next trade we're going to risk is 200. Tails, so we sell. Winner. So now we plus 200. We're going to keep taking a few more. Heads we buy, tails we sell. Tails, time to sell. That was a loser. So this one minus 100. This next trade we'll risk 150. Heads we buy, tails we sell. It's heads, so we buy. Loser, so minus 150. The next trade we're going to risk is 200. Heads we buy, tails we sell. Tails, time to sell. Okay, so that trade was risking 200, so now we take 200 off. It's another loser. We're down to 750. Next trade, heads we buy, tails we sell. Tails, time to sell. And that one was a winner. So now we plus 250. So we're back to around break even. I'm going to do this for a couple more trades. Then we're going to look at the win rate, analyze. I'm going to give you my thoughts on what, how this works. So we need to come up with our next idea. Tails we sell. Again, there's going to be timestamps below, so you can skip to the end of the backtesting session if this bit is not too interesting and you want to read about the data. All right, that was a win, so plus 100. The account's up to 1100. Heads, we go for a buy. Cool, it's a winner. So plus another 100. Tails, time to sell. another winner, plus 100. So we'll stop there for the moment. The account's at 1,300, 30% gain, obviously risking 10% of trade to start off with, so it's quite high risk. Now, we're going to just look at the trades we've taken and we're going to come up with a win rate. So we took 14 trades and after that we came up with 8 winners and 6 losers. So what does this actually mean? What have we learned here? Well, firstly, that was profitable. Okay, we only took 14 trades. Now maybe you should look through your own journal and see if you're profitable. And the second thing that you should look for is how much did I actually do? How much was I managing a trade? How many times a day was I checking the trade? Did I just let it run to stop loss or take profit? Was I constantly looking for reasons to exit and enter? How many things did I give myself to do? I gave myself one reason to enter, which was it heads or tails? Now you can swap this for was price at a resistance zone? Is there news out soon? You can make it a bit more detailed. You can find out clear daily zones. You can see its price bounce during the past, how many times. You can start to actually have more of a reason behind it, but I just went for heads and tails in this video. The thing that I was keeping track of was risk structure. If we made this video the other way around, where we came up with good reasons to enter the trade, but the risk structure was random, so you say you risk 1% one trade, 10% the next, 4% the next, and you kept that random, that is truly gambling because you're not managing risk at all. You're giving every trade different weight, okay? Here, there was a reason when I increased risk. So in my opinion, trading is just all about keeping it consistent, doing the same thing again and again and again. Nobody's going to be right 100% of the time. When your setup appears, you need to take it, whatever your rules may be. And from my experience, it's best to have a couple, 2 to 4 really clear rules, not many or if any trade management rules at all. Let it run to stop loss and take profit and keep it consistent. Keep track of your risk. If you decide to increase risk, have a very clear structure of when you decide to do so. I personally wait for a couple of losers and then I will increase risk because for me and for most people, big losing streaks is very uncommon if you know what you're doing and you keep things consistent, never more than 4 or 5 at a time. So I'm prepared to have 8 to 10 losers, okay, before I get anywhere close to risking a lot of money. So if you found this video useful and this idea helpful of how simple I believe trading really can be, then give it a thumbs up. Hopefully you join in Telegram and I'll see you around there. But yeah, I hope you found this video useful. Cheers.